How many times have you heard sell in May and go away, right? It's a catchy rhyme around the stock market, but it is actually good investment advice. Welcome to Trading Nation. Matt Maley with Miller Tabak with Miller Tabak. I think it's the second time I've done that. Erin Gibbs with S&P Global is joining us. And, you know, Matt, I wonder, it's one of those things that sort of became a thing because it was true for a while. Do you think it still is true? I mean, is it actually a one-liner good investment advice?
It's absolutely not good investment advice. I mean, as you mentioned, there is some historical precedent for it, and you know, all sorts of studies. If you go back, how many years? 75 years. If you bought and sold in May and bought back in November, you'd outperform by this or that. But over the last, I was just looking at it recently. Over the last since 2000, I think it's 10-7 up versus down. Or sideways. It really hasn't been a good thing. It's kind of like that January. You know, how goes January, so goes the rest of the year. And of course, if you did that last year, you got absolutely clobbered. I mean, you have to look at the fundamentals or even at the technicals at any given time. I mean, can you imagine last year if somebody at the end of the year, some portfolio manager said, geez, I underperformed, but the reason why I didn't buy stocks was because January was down, and I figured out I should stay away from the stock market the rest of the year. He'd look like an idiot. So you got to look at what's really going on in the market at any given time, and not at some kind of turning the page on the calendar or something.
You say looks like an idiot like it's a bad thing. I've been there many times. With Matt Maley, it's bad investment advice. All right, Erin Gibbs, you crunch numbers for a living and in a good way. Does this hold up, or is it, to Matt Maley's point, just total garbage?
So on average, the market does tend to be down during the summer months. That's true, but it really makes a difference on what's going on in the U.S. economy. So we split it up a bunch. We basically tested 10 different macroeconomic indicators, and basically, if the indicators are positive at the end of April, the market actually tends to be up, and so you should not be selling and going away. If the indicators are negative, then going into those months, so stuff like the ISM, CPI, Consumer Confidence Index, those type of things, if those are negative, we actually do tend to have much more negative returns for the summer months. Now, right now, everything is pretty positive, so I'd say stay in the market. This is one of those years where the adage will not hold up, but we did notice that there definitely was a difference when you looked at the macro picture.
Could it be buy in May and hope it pays? I mean, should we actually be buying stocks here, Erin? I guess.
It's right now with valuations, I'd say, you know, it's 50-50. We're not exactly cheap right now, but definitely hold on.
I'm trying to come up with a rhyme for hold in April. If you can come up with one, America, please let us. A hold in April, something. Is there anything that rhymes with April? Anyway, Matt Maley, thank you very much. Erin Gibbs, we're a little punchy on this Friday. Guys, appreciate it. Thank you. Folks, thanks for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.